The problem is government is too big. It spends too much money, and it has to create inflation because it doesn't have the guts to raise our taxes. For example, this passed, Congress did. I guess Biden hasn't put his John Hancock on the bill yet. I'm sure he will. But the House just passed this $95 billion foreign aid bill. Where's the money coming from to cover the cost of the foreign aid? Nobody's appropriating any money to pay for this. We just voted for bigger deficits, right? The national debt, right, just goes up by almost $100 billion overnight on top of the other gains because we're going to give another $61 billion to the Ukraine on top of the, $75 billion we've already given them. What's that, $135 billion to $140 billion? That's serious money that we sent to the Ukraine. What did that money buy us? The deaths of thousands, tens of thousands of Ukrainians and Russians. I mean, the war is no closer to being won now than it was a couple of years ago. In fact, it's just closer to being lost. All we're doing is postponing the inevitable and driving up the fatality rates on both sides. This is real money. Where's it coming from? More inflation.
In a recent analysis, economist Peter Schiff argued for more rate hikes in the U.S. economy, citing sustained inflation as a primary concern. He emphasized evidence such as soaring commodity prices and increased credit-fueled consumption over the past decade. Schiff asserted that previous rate hikes had failed to stem borrowing and spending, exacerbating inflationary pressures. Warning of the consequences, he highlighted how inflation has eroded purchasing power, leading many Americans to take on additional jobs. Schiff advocated for a solution centered on curbing government expenditures rather than relying solely on inflationary monetary policies.
A year ago, when the talk of rate cuts was hot and heavy, when they were talking about 4 rate cuts, 5, 6, 7, 8, whatever it was, everybody was talking about all these cuts that were going to happen. And I kept saying, we're not going to get all these cuts, that inflation is not going to allow the Fed to cut rates all these, so many times. And the reason that Wall Street assumed that the Fed was going to be able to slip in all these cuts was because everybody thought that inflation was going to come down. But to me, that seemed like a ridiculous assumption to make. And the evidence that was building clearly showed that inflation was in the process of bottoming, at least the way they measure it with the CPI or the PCE. And if you looked at what was happening with commodity prices, it made sense that inflation was going to head back higher. And of course, if you understand inflation, and I kept pointing it out on this podcast, that what was significant was the increase in credit that was driving the consumption, both government credit and household credit. Everybody was borrowing more and more and more so they can keep on spending. And so my point was that the rate hikes had been inadequate for the job. They hadn't bent that demand curve. The higher rates weren't constraining borrowing. Consumers and governments just kept borrowing anyway and kept on spending. So all that demand was there. Meanwhile, I kept pointing to the manufacturing recession. The output wasn't there. So we're not producing more, but we're borrowing to spend more. It was clear that prices were headed up. And in fact, we flooded the economy with inflation for over a decade. And that inflation finally reared its head. This was the beginning, not the end. I mean, people are still claiming, I look at, Paul Krugman is doing another victory lap, trying to claim that the inflation that he never saw coming is over. They're saying, it's just a one-time jump in inflation and now we're right back down. So no harm, no foul, which first of all ignores the fact that that one-time jump was significant. It was like a 30% increase in the cost of living. That means something. Even if inflation did come back down to 2% and stayed there, that one-time jump is huge. For Paul Krugman and all of those other economists to dismiss that as if it is nothing. That's the reason so many Americans are now moonlighting. They've got second or third jobs because of that one-time jump in inflation has destroyed the purchasing power of their incomes. And so now they have to work more to buy what they used to be able to buy working less. But it's not even one time. The only thing that's one time is the decline. The decline from 9% to 3%, that was the one time, right? That's over. And now we're heading back up. Look, I went to the store today. I went to Walgreens. I needed to buy batteries. We were out of the 9-volt batteries. So I went down and I bought 2 batteries, and it was like $14, $14.50 for the 11% sales tax. So I paid like $8 for a battery. I mean, one battery, $7 for a single apple. If you think about it, that's about the minimum wage. Minimum wage is $7.25 an hour. One apple, someone's going to work for an hour. Here you go. Here's your apple and in fact, you don't even get the whole apple. The government takes a bite out of it because you got to pay payroll taxes. So after taxes, you might have to work an hour and 15 minutes to have one apple. I mean, that really shows you the degree to which inflation is eviscerating people's incomes and their living standards. And again, it's not inflation, it's the government. When people talk about inflation, we have an inflation problem, we have a problem. The problem is government is too big. It spends too much money, and it has to create inflation because it doesn't have the guts to raise our taxes. For example, this passed, Congress did. I guess Biden hasn't put his John Hancock on the bill yet. I'm sure he will. But the House just passed this $95 billion foreign aid bill. Where's the money coming from to cover the cost of the foreign aid? Nobody's appropriating any money to pay for this. We just voted for bigger deficits, right? The national debt, right, just goes up by almost $100 billion overnight on top of the other gains because we're going to give another $61 billion to the Ukraine on top of the, $75 billion we've already given them. What's that, $135 billion to $140 billion? That's serious money that we sent to the Ukraine. What did that money buy us? The deaths of thousands, tens of thousands of Ukrainians and Russians. I mean, the war is no closer to being won now than it was a couple of years ago. In fact, it's just closer to being lost. All we're doing is postponing the inevitable and driving up the fatality rates on both sides. This is real money. Where's it coming from? More inflation.
Continuing the discussion, economist Peter Schiff delves into the implications of government spending, particularly citing massive foreign aid bills. He argues that such expenditures are a threat to national security, pointing out that the real danger lies in Washington's deficits and printing of money. Schiff questions the necessity of providing aid to Ukraine, highlighting the financial burden it places on American taxpayers. Additionally, he emphasizes the need for transparency in funding such aid, and suggests either cutting government spending or raising taxes to cover the costs. Schiff also discusses the stock market, noting a potential rotation from growth to value stocks amidst rising interest rates.
That's the national security threat. I mean, supposedly we got to give money to the Ukraine because that keeps America safe. Because if we don't stop Putin at the Ukraine, well, the rest of Europe is there, and the next thing we know, it's World War III, right? So we can't appease Putin like they appeased Hitler, right? So we got to keep spending this money. The real threat to our national security is coming from Washington, D.C. It's the deficits that we're running up. It's the money that we're printing. That is the threat, not what's going on in the Ukraine. That is a problem for the Ukrainians. It's a problem for Russians who are dying, but it's not a problem for Americans. The problem for Americans is that we're paying for it all. And of course, we've got this blood on our hands if you want to ignore that, but we're paying for this. Look, assuming that politicians really thought this aid was necessary, and there's some Israeli aid in there, and I don't know, we gave money to other countries, although we're not even giving our own money because we don't have it. I mean, we're having to borrow money to give it away. I mean, which makes no sense. Sure, if we were swimming in surpluses and we wanted to share some of our surpluses, but we're already broke, right? We have no business giving aid to anybody when we need to aid ourselves. But if these politicians really believed that this was worth it, right, that we really need to give this money to the Ukraine, then pay for it. If it's worth doing, it's worth paying for. If we really need to do this, level with the American public and say, we got to send $61 billion to the Ukraine, so we got to raise your taxes to pay for it. Be honest. And if you're not willing to tell Americans they have to pay for the aid, then don't vote for it. The other way to pay for it is cut spending somewhere. Just make it, revenue neutral. So at least it's not extra, right? Cut something else. But no, the politicians that are for this aid don't think it's worth cutting any other government programs to pay for it. And it's not worth raising anybody's taxes to pay for it. Well, if it's not worth higher taxes and it's not worth cutting spending, then it's not worth doing. Don't do it. No, they think they can have everything, right? It all, money from heaven, right? It just grows on trees. Doesn't matter. We can do everything. So it should have been obvious, and I just digressed into this whole topic, but it should have been obvious 6 months ago, a year ago, that we weren't going to get these rate cuts because inflation wasn't going to cooperate. Inflation wasn't going to come down the way everybody believed. But it was that forward look at an easing of monetary policy. That's what was powering the Magnificent Seven, or Magnificent 5 or 6, because a couple of them, Tesla, started going down a while ago, while the other ones were still making new highs, riding the AI gravy train. But all the while that these rate cuts were being backed out and bond yields were rising, mortgage rates were rising, back above now 7 again. I forget what the 30-year rate is, but it's headed up there. But the stock market was really ignoring it. The NASDAQ was ignoring it because those are the stocks that are the most sensitive to interest rates. I've discussed it on the podcast before. The companies that are promising big numbers in the future, growth stocks, those future earnings are much more valuable today when interest rates are low. So when they're not low, when they're higher, those stocks should take a much bigger hit than, traditional value-oriented dividend-paying stocks that are paying right now, that have the earnings right now, and that are paying their shareholders. So for a while, these stocks kept going up, and I was like, this doesn't make sense. They've got to go down. They've got to break. Well, this week, or last week rather, or was the week they broke, because you had this big divergence. The NASDAQ, as I said, was down about 5.5%. The Dow was actually positive on the week. I mean, just like a point or so. It was barely positive. But what's significant is that it wasn't negative, and the NASDAQ held. So I don't think this is the end of a rotation. My bet is it's the beginning of a rotation. There's going to be a lot more momentum to this trade as people sell growth and buy value. Now, that doesn't mean that the Dow is going to keep on rising in the face of a falling NASDAQ. I think the Dow, is going to turn down. It's just not going to fall as much as the NASDAQ. I think we have a bigger correction coming. I think until we get some real weak economic data, which I also think is coming, because even right now, some people are talking about the potential for rate hikes, which I've been talking about again for months and months and months. All of a sudden, they're saying that it could happen.
Thanks for tuning in today. In this transcript, Peter Schiff provides valuable insights into the state of the economy, highlighting concerns about inflation and government spending. He emphasizes the impact of borrowing and spending on inflationary pressures and discusses the consequences of massive foreign aid bills. Schiff also touches on the stock market's response to rising interest rates, suggesting a potential rotation from growth to value stocks. Remember to subscribe to our channel for more updates like this video if you found it informative, and share your thoughts in the comments below.